Alright, in this video, I am going to state how I trade. Well, what I'm going to state is basically the strategy I use, although I must add a caveat that, in my own opinion, and with what one of my mentors has said, that is Dr. David Paul, is that we don't trade charts, we trade our beliefs about the market. So I may have my strategy, but at the same time, I'm able to use it and another person may not be able to use it. Why? Because the strategy itself is imbibed in my own experience as a trader. Well, let me delve straight into the topic of for this video. Now, basically, I use price action, and I use the price action of the Heikin-Ashi candlesticks. We have several types of. There are several ways in which the price data can be outputted to users. We have the Heikin-Ashi candlestick, we have the Japanese candlesticks, we have the line chart, we have the bar chart, we have the Renko. There are several. Now, I basically use the Heikin-Ashi because, well, I started using it in 2024, and since then, I've just used it since then, and I've gotten accustomed to its price action, so I can read the price action very well. So primarily, I must say that price action is a very big aspect of my strategy when it comes to trading the market. Now, but price action must be placed in must be put in context. You can't just use price action like that. So what you are seeing on the screen now, you can see all these are price action. You can see they give data. They tell you what is happening. They tell you what is happening. For example, if you see from this candle here down all the way to this candle, from this candle here down all the way to this candle, this was a very big move, although it happened in Tokyo session. Now, it's beautiful like this, but price action, I like putting price action in context. And for my context, I use basically the moving averages. So, for example, I am on the 5-minute chart, but let me apply moving average to this chart. I use the 10 simple moving average. You see, I've applied it to this chart. This is the 10 simple moving average. And this 10 simple moving average is not based on the 5-minute chart. Rather, it's based on the 15-minute chart. I'm going to tell you this is how you do that. When you put the 10 moving average on your chart, by default, it's going to use your chart's time frame. But you can go ahead to edit the data you want it to impute. So, for example, if I go to settings, so let the settings open so you can see what I'm talking about. You just have to click the indicator's name, then you click on settings. I don't know why it is not responding now, but ordinary, when you click on the toggle, you see your settings is going to pop up. Alright, so the settings has popped up. Now this is it. If you can see, there's something called time frame. If you look at this menu that has come up, if you go to this, you see short MA length, long MA, that's where you set the length, but basically I use 10, and I use 10 only. I switch off the long MA is based on 20, but I switch it off here. You can see it is switched off here. Now this is the time frame. So on this my 5-minute chart, I'm applying the 15 minutes 10 simple moving average. So the simple moving average on this my 5-minute chart is based on the 10 simple moving average of the 15 minutes time. Now let me tell you why I use this 15 minutes 10 moving average to determine the trend for my 5 minutes. So in essence, 15 minutes is my higher time frame for my 5 minutes. You can see it there. So that's all. This is how you can change it. So that's for that. Now, despite the fact that I have this trend, this 15 minute, this 10 SMA, I also need a way to avoid consolidation, because I believe a lot of traders don't make money because they trade when the market is consolidating. Market moves in three ways only. The market either goes up, or it goes down, or it's moving sideways. Majority of the time it's moving sideways during the quiet time, but many times it moves sideways. And another thing I wish to say is that if you can avoid consolidation and you trade with the trend, you find a way to determine your trend. For me, I use 15 minutes to determine the trend for my 5 minutes, because I primarily changed 5 minutes. And you trade with the trend, I believe you are going to be a profitable trader. So for me to avoid consolidation, I use what I call the 10. It's also a 10 moving average, but this is now based on the 5 minutes chart. So I use the 10 simple moving average channel that is based on the 10. I'm going to put it now. So I configured mine with Pine script, although you can just apply any 10 simple moving average channel. The channel basically is made up of 10 simple moving average based on the high, that's one, and 10 simple moving average based on the low. By default they use close. So when you put the 10 simple moving average, be just change it to be calculated based on high. You put another one, put it to calculated based on the low. That's quite simple, because if you go to your settings in your indicator, for example, maybe use this one. For example, you go to your settings in your indicator, you can choose you want your how you want your indicator to be calculated, whether based on high or based on low. Well, it's not on this particular indicator, but if you put a simple moving average, you'll be able to you see it based on low. If you use trading view, it's a very simple thing to do. So now I'm going to put my 10 simple moving average channel. Good. Now this is my 10 simple moving average channel. I'm going to explain. Now if you look at, you can see the blue, you can see two lines and blue in between. Those two lines with and the blue in between, they are simply periods. If a candlestick is in between these blue lines, not the blue, in between the purple lines, but just is covered by the highlights, I will not trade in that period, because the market is likely, for example, look at this period here, market is consolidating. So when the market breaks out of the channel, that's why I apply my knowledge of price action. For example, look, it was consolidating here, then it broke out. When it breaks out, that's when I will start to look at for a pattern that I'm going to enter. So that's all I do. I don't do any other thing. So it's based on my knowledge on price action, the 15 simple moving average that is based on 15 minutes, which I apply to my 5 minutes chart, and the 10 simple moving average channel. You can do your own channel. The channel is simple. Just put two simple moving averages. The first one should be calculated based on high. The second one should be calculated based on low. You can do that from the settings of the indicator. You are going to see it there. So that's for that. Now you may see some arrows on my chart. Well, I'm just the one who created that. It does not mean anything much. Simply, wherever you see an arrow, it simply means that particular candle that has the arrow, as is close. The close of that candle is, for example, for an arrow pointing upward, it means the close of that candle is higher than the high of the previous candle. And for the arrows pointing downward, it simply means the close of the present candle is lower than the low of the previous candle. In candlesticks, we have open, high, open, we have high, close, open, low, if it's a bullish candle. If it's a bearish candle, you have high, open, close, low. If it's a bearish candle. So that's it. So that's all I do. Now, based on let me just give you a snippet into my price action, because price action is not something I I can really teach because in essence it comes with experience. But if you can read, there's this popular book, the Candlestick Bible. I've forgotten the name of the author, but the Candlestick Bible by written by it's a Japanese name. That book is very simple and it contains very simple lessons on reading charts. It's just that some people tend to not take it serious. It's quite simple because price, to be honest, indicators will not make you profitable. I don't think indicators can make you profitable. Indicators can only help you in terms of context, and that's what I use indicators for. They help me in terms of context. But when it comes to like whether you should buy or sell, that's the best time to buy or sell. It's price action that is really going to help. For example, if a candle breaks out of this moving average channel, I start looking for a place of pressure. For example, this is an instance. It broke out here. When it broke out here, it attempted to go back. You can see these small doji candles. So we had this one had lower low. Then we have the doji candles with higher lows. Then you now see a subsequent candle that has a lower low than those doji candles. It simply means that they attempted to push price up, but they could not push price up. Sellers came in and pushed the low down. You see, it's quite simple. It's just based on 1, 2, 3, 4, 5. For example, there's the first candle low was 7. Then there was a subsequent candle that the low was 8, which means it went higher. The next one was 9, it went higher. Then the next candle now went to 6, which means it went lower. What does it tell you? It tells you that the market is obviously going down. And secondly, it's happening when it's not highlighted in my moving average channel, which tells me when the market is consolidating or when the market is likely to consolidate. So if I see something like that, I'm going to sell and set my stop loss. There's no point bothering whether your trade is going to work out or not. That's not your business. You can't tell. Nobody can tell whether a trade is going to move or not. The best thing you can do is to set your stop loss and manage your trade, because risk management, if you have traded the market for quite some time, you're going to realize that risk management is actually the holy grail. There's no holy grail. You can basically use any strategy you want. As far as you're managing your risk, you'll be profitable. I can tell you that. From when I started trading back then from crypto in 2023, I've used a lot and a lot of strategies. I have jumped from strategies to strategies to strategies. I did it. So I did it. And what did I realize? I realized that all of them work, and at the same time, all of them have periods they do not work. So that's it. That's why the best thing is risk management. If you can manage your risk, you'll be good. You'll be good to go. So basically, this is my strategy and all I use. And today is Saturday. The market is going to open on Monday. And when the market opens on Monday, it's the same thing I'm going to do. I'm going to open. I take 5 minutes. I come on the chart by 6 o'clock a.m. Enter, find it, look, watch the market, say setup. I enter. If it goes in my favor, I know when to close, or it hits my take profit. I am done. And I come back by 9. Same thing. Come back by 1. Particularly if there's a news in New York session, I do the same thing. Come back by 6 p.m. in the evening. I do the same thing. I keep repeating it day in, day out, day in, day out, day in, day out. And at the same time, I am managing my risk because I know the importance of risk management. If you manage your risk very well, for example, tightening your stop loss. If you open a trade and the market moves in your favor, the next thing you should do, you should tighten your stop loss. You don't leave your stop loss the way it was originally. I feel, personally, to me, the purpose of stop loss is it simply means a space or a headroom where you give the market to fluctuate. So if the market, after you open your trade, you set your stop loss, the market moves above your end. Maybe you're in a buy, it moves above your entry, means you're in profit. Simply tighten your stop loss to, you are simply adjusting the headroom so that in case it wants to fluctuate, it can still fluctuate, but it should not fluctuate past a particular point. So you should never let a market that went in profit come back to your original SL. You must learn to tighten yourself. So those things are risk. I will do a video on risk management subsequent. But for now, this is just the strategy I trade. And it's all I do. It's all about making money. If you want, I can show you my trade history. This previous week that ended yesterday, or rather, this trading week that ended, yes, trading week that ended yesterday, it was a huge week for me. I made profits. Those on my Telegram group can attest to that. I made money. So that's that. Remember, strategy will not make you profitable. What will make you profitable is your mindset and how you manage your risk. To a large extent, the market is random. So because you can't tell what's going to happen next. So that's why we manage the risk.